A bumpy road as markets come to terms with a recovery that doesn't quite want to get here and a virus that certainly doesn't want to leave. This is Bloomberg Wall Street Week. I'm David Westin. This week, Speaker of the House Nancy Pelosi.
American people are watching. We want to show them we've heard you, we see you, we've listened, we've learned how important this is to you.
Darren Walker of the Ford Foundation.
I don't want to be a unicorn. I believe that this opportunity and dreaming and having the possibility of realizing those dreams, that should be for every American.
Contributors Larry Summers.
The fundamental constraints on the economy, some sectors aren't going to be able to come back.
And Glenn Hubbard.
The econ recovery looks like a Nike swoosh sign, so sharply down and then a gradual upturn.
Katie Koch of Goldman Sachs.
We're not short-term, we're long-term, but what I will say is that we do love to invest in the beneficiaries of this volume.
Contributor Sam Palmisano.
I think the lesson in this, especially from an investor perspective, is what it will be the transition.
And former head of Homeland Security, Jay Johnson.
This is not just a black problem. It's not just for African Americans to speak about and be upset about. Every American should be equally as upset about what we saw in Minneapolis.
Last week, the markets were excited about recovery. This week, it's settled in just how uncertain that is and how long it may take.
We're not thinking about raising rates. We're not even thinking about raising rates. So what we're thinking about is providing support for this economy. We do think this is going to take some time.
And the coronavirus continues to lurk. As it loosened its grip on New York.
We're in a new phase. We're feeling good. We've done great, but we have to stay smart.
It shot up in states like Florida and Texas and Arizona and California. And as always, the burden fell disproportionately on those least fortunate, as the nation tried to come to terms once again with 400 years of systemic racism.
I don't believe racism is deniable as an option for white Americans. And I believe that for most white Americans, it was a heartbreaking thing to see that.
So which is it? Are we headed toward the recovery that we'd hoped? Or are we still vulnerable to risks we don't fully understand? And to help us understand that question, we turn now to our special contributor, Larry Summers of Harvard. So, Larry, last week when we were talking, it was optimism verging on euphoria, coming off those very strong jobs numbers. What happened in the last week? What really happened in the real world that may have affected us the way the markets reflected?
Look, David, there wasn't that kind of optimism on my part. It was nuts for the market to be back at its beginning of year level. It was nuts when, on some measures, the total enterprise value, including debt, of American Airlines was back to where it had been before, even though it's going to be years before their volume gets back to where it was before. It was the equivalent of creation science to think that we could open everything up and not have any kind of second wave. It was crazy the way penny stocks and stocks just back from fraud and stocks in bankrupt companies were surging at the end of last week. So the miracle isn't that there's something remarkable that you have to explain this week. The miracle is where both the markets and popular thinking had gotten to by the end of last week. And the story of this week was a reconvergence towards sanity. Sanity that this country has a long slog to full economic recovery. Sanity that we haven't seen all the financial distress that's going to accompany the dislocations that have taken place in this expansion. Sanity having to do with the fact that this virus is a long way from gone. We are a long way from herd immunity, and we are a long way from an effective vaccine or therapy, and we're still fiddle-faddling around, not moving strategically, strongly, or effectively on testing. So all those awarenesses, which were always there, but people lost sight of because a jobs bounce back happened a month earlier than they thought it would. That's always been the story, and that still is the story. And markets got back towards recognizing that this week. It's to Jay Powell's great credit that he doesn't go into random fits of euphoria when he gets a good statistic, the way some of the other financial and economic officials in the administration do. And that's not easy for him, and he deserves to be saluted for that.
So picking up on Chairman Powell specifically, he was fairly sobering, I think, in his remarks. And he said things like, unemployment may well be double digits at the end of the year. Has the Fed done, as a practical matter, just about everything it can do at this point?
I think the Fed has fired most of the ammunition it has. We could have new problems in terms of very weak financial institutions, new problems in terms of a sharp widening out of credit spreads. There may unfortunately be new opportunities for the Fed to play defense and protect the economy. But I don't think the Fed's got a lot left that it can do on offense, which is why I think fiscal policy is going to be so very, very important going forward. And I think the discussions about the possibility of delaying fiscal stimulus and limiting fiscal stimulus are very unfortunate.
So as you suggest, we did see the virus spike up in some of the southern states, in particular, Florida, Texas, Arizona, and as well as California. The absolute numbers may not be that high, but certainly the trend is disturbing. We heard from the Secretary of the Treasury this week, Steve Mnuchin, who said, really, we're not going to shut the economy down pretty much whatever happens with the virus. Does that make sense?
I think that if you had to take the 5 most unfortunate economic statements of this administration, and there have been some doozies, that one would fit comfortably in the top 5. First rule of economic policy making is never say never in an extremely uncertain world with plenty of unknowns. Second, he can't possibly mean it. The second wave of the pandemic was more than 50% worse than the first wave of the pandemic. He doesn't have actual control over whether the economy is or is not shut down. Governments have the legal authority, and people have the legal and moral capacity to decide whether they're going to stay in their houses or not. Does anybody believe that if we have a second wave that is substantially worse than the first wave, that everybody's going to continue going about their business, or that would be a good idea? Is that a belief that any serious person holds? Does anybody think that it's inconceivable that we'll have a second wave? I don't think the answer in either case is yes. And therefore, I find the statement inexplicable, except in one way: raw, simple sycophancy towards the things that the president is saying. No one would base an investment decision on an idea like that, certainly not someone who's been as successful as an investor as Secretary Mnuchin was when he was in the private sector. So you can debate what the likelihood of a second wave is. Right. You can debate to what extent closing things down slows spread. But to say that no matter what happens, we won't close things down is to depart from the realms of reality and responsibility.
So, Larry, you don't want to give investment advice, and I want to ask you to, but if I'm an investor and I'm listening to you, give me a sense of what I should expect in terms of the economy, in terms of unemployment going forward and growth for the next 6, 12 months.
You're right. You're right, David. I don't want to give investment advice. I think there's a good chance that we have made, at least for some time, a bottom in terms of GDP and in terms of employment, and that things will get better from here. But we're in a very deep hole, and we're going to still be in a very deep hole, and we're not going to be halfway out of that hole a year from now. And so, yes, the rate of change will improve, but no, the situation won't be remedied or normalized. And we basically had only a small number of episodes of downturn of this magnitude. We had one during the Depression, and policy became complacent and pivoted back to tradition about budget deficits and the like in 1937. And we had a calamity that made it so the economy never really got going, except when that was forced by the Second World War. We had to pivot back to traditional thinking, worry about inflation, worry about budget deficits and the like in late 2009 and 2010. And that's why it took 7 years for the economy to recover. So the big danger is that people are going to become complacent and think that we're most of the way back. I don't think that's very likely.
Well,
if I could just add
this week
more.
didn't encourage a lot of complacency, that's for sure. Thank you so much to Larry Summers, our special contributor at Wall Street Week. Coming up, how much support is the Fed giving to the economy? And is it enough? We talk with Glenn Hubbard of Columbia.
I worry it's doing a little bit too much. We're asking the Fed to fix a pandemic, which is a supply shock, as well as some of the losses from that to demand, which frankly were better fixed by fiscal policy.
This is Wall Street Week on Bloomberg.
Should we abolish the Federal Reserve Board?
Yes.
What would you replace it with?
A computer.
And what would you tell the computer to do?
I would tell the computer to see to it that the money supply goes up at exactly 2% per year, or as close thereto as it can manage on a week-by-week, month-by-month, year-by-year basis.
That was economist Milton Friedman on Wall Street Week back in 1984, when Ronald Reagan was the president and Paul Volcker was the chair of the Federal Reserve. Well, a very much alive Federal Reserve met again this week, and although it didn't take action on rates, it did send some powerful signals about where the economy is and the need for continued support for some time to come. Glenn Hubbard served as the chair of the Council of Economic Advisors under President George W. Bush, and he says that the Fed this week got it pretty much right.
I think it's fair to say the econ recovery looks like a Nike swoosh sign, so sharply down that we went through, and then a gradual upturn. The employment report was certainly very promising, but I think it's going to take some months and maybe a year and a half or so to recover the level of GDP and level of employment. So it's not as bad as many may fear, perhaps, but nor is it a V-shaped recovery. I think with the price of oil falling, you're seeing both structural problems in the oil market, supply and demand imbalances, along with just a feeling that global demand may be weak now for some time.
So is the Fed doing all that it can? I mean, goodness knows it's done a lot. And Jay Powell indicated he's not going to take his foot off the accelerator. But is it doing, in your opinion, what it should be doing?
Well, I think it's doing, if I can be an economist for the moment, the right amount, too much and too little, all at the same time. So the right amount meaning speed. The Fed really got on this fast. As the pandemic shutdown happened, it went into overdrive both with traditional monetary policy and with new facilities. I worry it's doing a little bit too much. We're asking the Fed to fix a pandemic, which is a supply shock, as well as some of the losses from that to demand, which frankly were better fixed by fiscal policy. Where I think the Fed may be doing too little is in standing up the Main Street lending facility, which sounds like a great idea for the current crisis, given the problems faced by small and mid-sized businesses. Yet the way the Fed is currently structuring the facility, I fear there will be no lenders and no borrowers, which is fine if you don't want to lose money, but not fine if you want to restart the economy.
So Glenn, what is causing that? I mean, we've all been waiting. We keep asking, when is the Main Street lending facility coming? And we keep hearing, a matter of days, matter of days. But what is causing it? Is it the statute? Does Congress basically say to the Fed, you can't afford to lose any money, so they have to be terribly cautious in this?
Quite the opposite. Congress in the CARES Act appropriated $454 billion to the Treasury to stand up Fed programs, not just the Main Street facility, but some of the other Fed programs in which the Fed might lose money. That's appropriate, of course, because the taxpayers need to sign off through the Congress and the Treasury. But the statute didn't say that the Fed couldn't lose money. In fact, why would the Congress have handed the Fed so much capital if it didn't think it needed it? My fear is that the Fed is setting up the programs in a way that banks won't find it that appealing, and many borrowers who need the money simply won't be able to get it. In fairness to the Fed, this is not something they've ever done before, and it is hard. And I suspect that some of the constraints are coming more from the Treasury Department, which has indicated a conservatism and a hesitancy to lose funds.
Let's go over the fiscal side, if we could, Glenn. What about the Congress? Nancy Pelosi has a proposal for $3.5 trillion. There's talk that maybe the White House is talking about $1 trillion. How badly do we need another infusion from the fiscal side, and how big does it need to be?
Well, I think we do need more insurance in fiscal policy. I think the outlook is quite uncertain, as Chair Powell's comments suggest. I think that where I would focus it, before getting to the number, think about the what. We do need to provide assistance to state and local governments for public health infrastructure and block grant support to help cushion the very large revenue declines and stop big cuts in state services and state and public employment.
And Glenn, what about the prospect of a so-called second wave? Are we all pricing in, the markets, but all of us, economists included, are we pricing in the real possibility that we'd have to shut down the economy again, something that Steve Mnuchin says we won't do no matter what?
Well, I think there's always been a possibility of a second wave. It's hard right now because of the uneven way in which we're testing. It's hard to know what data mean because we know the numerator, people testing positive. We don't know the denominators. We're not really knowing how many people are being tested. I don't think we're going to need to shut down the entire economy again. I think it's probably more efficient strategies by subgroups of the population and parts of the economy. But obviously, if it's a major outbreak of the virus, that's different.
That was Glenn Hubbard of the Columbia Business School. Coming up, contributor Sam Palmisano has been taking a look at how businesses can safely come back to work.
The learning of this is you need to have a total enterprise solution to this, and you have to put that into a policy framework that allows you to permit people to enter your facilities.
This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. The pace of the economic recovery will depend critically on how fast and how safely people can come back to work. And technology can play an important role in that process, something that Wall Street Week contributor Sam Palmisano, former CEO of IBM, has been spending some time figuring out.
It's a critical issue, and I know that a lot of the conversation since yesterday has been about economic recovery, and you can't recover unless you get people back to work, as you well know. So the key is how do you do that safely, and how do you do that with your entire workforce, not a portion of the workforce? Most of the solutions so far have been restrictive. I mean, you hear people talk about 25% or shift alternating, what have you, relative to engaging the whole productivity of your workforce back into your operations. So we've worked on this with many companies in multiple industries. It's gone from everything from entertainment to sports to construction to academia. I can go on and on and on. So we've learned a lot. And the key learning is that there are lots of, I'll say, point solutions. I mean, perimeter kinds of testing, temperature testing, et cetera, But the learning of this is you need to have a total enterprise solution to this. By that I mean you need testing, you need symptoms, you need travel, maybe contact tracing, and you have to put that into a policy framework that allows you to permit people to enter your facilities. So the key is multiple inputs and the policy engine.
And how does it work for an employee? I mean, how do you protect some degree of privacy, or do we need to give up some privacy here in this new COVID-19 world?
No, it's totally private. The employee or the individual is the only one to see. It could be an employee, it could be a fan. They're the only ones that see the actual conditions. And the way it works is that you take those variables that I discussed, I won't repeat them, and you create a QR code. I mean, a healthcare provider would actually provide the test, but it's only to you, the individual. And the employer does not see any of that information. And you enter your own symptoms. Again, it's the employee or the individual that does all that. Now, if the individual wants the employer to see that because their HR department wants to help them line up a test or get treatment, whatever it happens to be, they have to agree. But it's totally private, totally HIPAA compliant, meets all the standards that are necessary from a privacy perspective.
Let's expand it out a little bit to tech more broadly and what tech you think can do, are they doing to try to help us fight this COVID-19? Right now, we're seeing an increase in cases in places like Florida and Texas and Arizona, California. Can tech help us fight against a possible second wave here?
Well, I think the key is what tech could do, and it depends on the large data sets, is it can project, quite honestly, where this thing is migrating and where it will go. I mean, when I was working at IBM, our research organization did a lot of work around bird flu and other things as to the migration and the path this will take, right? So there's a lot that can be done from a predictive model. Clearly, there's a lot that tech can do from the perspective of getting the treatments or the vaccines to the markets faster. I mean, applying a lot of these advanced AI kinds of capabilities into the actual analysis of the trials and those sorts of things could also accelerate the ability for treatment as well as vaccines as we get into the future. So there's a huge role, but there's also just a basic role for tech, quite honestly. And I'll call it people's lifestyles.
Do you see tech evolving quickly to respond to some of the needs there are in society? Is it changing? Is it investing?
Oh, that's wonderful. It's a great question, actually, because the key question are we in a transitory moment or are we in a transition? And that's how I think about your question, because you could look at a lot of these things that are exploding and say, well, they're transitory. I mean, the fact that we have all these people that need to interact now, it's a transitory thing, i.e. Zoom is way up, et cetera, et cetera. They're exploding. However, what will happen when it's over? So is it going to be really a transition? I think the lesson in this, especially from an investor perspective is what it will be the transition.
That was Wall Street Week contributor Sam Palmisano. Coming up, Darren Walker of the Ford Foundation on what we need to do as a society to go beyond talking, to do something about systemic racism.
CEOs and boards are going to have to look deeply within their own policies and practices and ask themselves, how do we transform ourselves?
This is Wall Street Week on Bloomberg.
Without that passion and that drive, I think that we're going to not make progress. And I think the companies are now starting to realize more and more that not making progress is not sustainable.
That was Ursula Burns, former Xerox CEO, the only African-American woman ever to serve as the CEO of a Fortune 500 company. To this day, there are only 4 black members of that elite club. And getting diversity into the boardroom has proven just as stubborn. There was a study done last year that said that every time a board seat comes available in this country, a Caucasian is 5 times as likely as a person of color to fill the seat. So, in the wake of the brutal killing of George Floyd, what can American business do to break the legacy of systemic racism, to ensure we achieve true social justice? Darren Walker, the president of the Ford Foundation, is committed to achieving just that.
We have to first start by throwing out the old playbook for crises like this, which involves a corporation assembling a group of African Americans on a conference call, issuing an apology, the organization itself issuing an apology or a statement of solidarity on its website, and making some grants to the NAACP and the Urban League and getting back to business. That playbook will not work on this occasion. On this occasion, CEOs and boards are going to have to look deeply within their own policies and practices and ask themselves, how do we transform ourselves? Because transformation is what will be required, and that will require incentivizing performance, as we do in every other facet of corporate life. We need to incentivize boards to increase diversity. We need to incentivize CEOs to ensure that their C-suites are diverse. And we do that because this is a market, and market has investors. So I'm hopeful that investors who have influence in the market, investors like BlackRock, like many of the large fund managers, the asset managers, all together say it is time that we do better in corporate America. And that means literally doing what we do with everything else, counting and holding ourselves accountable for delivering on those targets.
We definitely need to see some diversity, as it were, at the top. And that's African American and Hispanic. I know you'd agree with that readily. At the top of these corporations, I think to this day in the Fortune 500, it's only like 4 or 5 African American CEOs. But going beyond that, what about some of the policies advocated for down in Washington, Darren? What about tax reform? What about things like capital gains tax? What about things like increasing corporate taxes? Because there has to be, doesn't there have to be some redistribution of the assets of America?
Well, we do have to have a conversation about our economy, because as a capitalist, a proud capitalist who believes that capitalism is the best way to organize an economy, I also believe that the current kind of capitalism we have in our country is not working for America. It is delivering outsized gains for people like me and you, David, because we've done incredibly well. If you own assets, if you own securities over these last years, we have done terrifically. But if you are the average working America, you have fallen behind. If you're the average person in the middle class in this country, you have fallen behind. And so we have to think about the policies, including tax policies, that ensure that we have shared prosperity in this country.
Darren, do you have a sense that this time may be different? Because let's be honest, we've seen other instances in the past when people have said, we're going to do better. And then people go on, they get distracted, they go back to their old ways. Is there reason for hope here that this time actually the momentum will continue and even increase rather than just dissipate as we pay attention to something else?
David, I am very hopeful today about my country. I'm hopeful because I believe that the issue of racism, which throughout our history has had the air of deniability. Racism after the murder of George Floyd on that street in broad daylight, the perpetrator being videotaped knew that he was being videotaped, but assumed that he could kill a man, a Black man, with impunity. I don't believe racism is deniable as an option for white Americans. And I believe that for most white Americans, it was a heartbreaking thing to see that. Because I don't think for most white Americans, a racist country is what we want. And I don't think for all of us that the idea of a country that is not guided by the principles of justice and opportunity and fairness, that's not a country that any of us want. We want to live in a country, as the poet Langston Hughes wrote, let America be America. And when that happens, when that day comes, we will all rejoice in the idea of a beloved community, one where each and every one of us has an opportunity to get on that mobility escalator, the one that I got on. Right. I'm in many ways a believer in what is possible in America. I was born in the bottom 1 percentile, and now I am firmly in the top 1 percentile, but I don't want to be a unicorn. I believe that this opportunity, the life that I have had and the privilege of living in this country and dreaming and having the possibility of realizing those dreams, that should be for every American, regardless of our zip code or our race.
That was Darren Walker, president of the Ford Foundation. Coming up, Speaker of the House Nancy Pelosi on reforming how we police our police.
By and large, we're well served by our first responders. Public safety is a requirement that we owe the American people. But the police have to police themselves, too.
This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. The tragic killing of George Floyd showed us once again the flawed relationship between some of our police and the black community. Congress this week took the first steps toward changing that relationship by proposing certain minimum national policing standards in a bill introduced by the Speaker of the House, Nancy Pelosi.
In terms of the Justice in Policing Act, I'm very proud of the work of the Congressional Black Caucus, the Judiciary Committee. The Black Caucus has had these bills in the hopper for a long time, but now the public sentiment is so strong that we believe that we have opportunity to get them passed. And they involve, of course, no chokeholds, racial profiling must end, no-knock warrants in terms of drug cases, issues like that, issues that relate to keeping the data, having a registry of first responders who have been engaged in misconduct so they're not hired again in another jurisdiction. The list goes on about violations to be banned, about measures to be taken so that we know who was there. And we all recognize that by and large, we're well served by our first responders. Public safety is a requirement that we owe the American people. But the police have to police themselves too, and we look forward to working with them as we go forward.
Madam Speaker, as we've talked about the various fiscal stimulus bills that you've really initiated, you've emphasized repeatedly how important it is to be bipartisan. We understand that the Senate Republicans now are working on their version of some police reform. There's even reports that the White House is working on maybe an executive order. Is this something that you want to work across the aisle and come up with a joint response on?
Always, always. It's so much stronger if we can work in a bipartisan way. So far, what we've seen from the Senate is weak, but nonetheless a recognition that there has to be some change. American people deserve that. American people expect it. American people are watching. We want to show them we've heard you, we see you, we've listened, we've learned how important this is to you, and we're going to do something about it. That's the question I was asked by George Floyd's brother when he came to testify before the Judiciary Committee in the Capitol. He said, I have one question for you. Will this become law? What makes you think so? What is different now? Well, different is the complete public awareness of the injustice of it all and the complete public outcry for change.
That was Speaker of the House Nancy Pelosi. When he ran the Department of Homeland Security, Jay Johnson was responsible for more federal law enforcement officers than any other person in the federal government. And when it comes to something like the horrific killing of George Floyd, he says it takes more than just training the officers. It takes making sure you have the right person you give the badge to in the first place.
I think there is no level of training that could eradicate that kind of depravity from someone's character. And when I look at that video, the problem I see, frankly, is recruiting. What kind of people are we recruiting to our nation's police departments? Are we recruiting people who want to protect and serve the public? Or are we recruiting people who want to be the neighborhood badass, the neighborhood bully, with a racist attitude in their hearts? And so I think it's incumbent upon police departments to look at the kind of people they're bringing in to their departments. And we all know that this is not a simple solution. It's nuanced. There are many, many, many good law enforcement officers, far more than there are bad. But to me, that level of depravity goes to the very fundamentals of the type of people that are allowed to wear a badge in this country.
So if the problem begins with recruiting, what's to be done about that? We talked with Speaker of the House Nancy Pelosi yesterday, and she said, listen, we've got a new bill out. We're going to have a national database. We're going to have a ban on chokeholds. Can you legislate recruiting?
I don't believe the answer principally lies in federal legislation. For one thing, Congress has disappointed us multiple times. Congress has disappointed me multiple times. After Sandy Hook, we all thought this will finally be the moment of change for better gun safety legislation. After Parkland, we all thought this would be the moment of change, and Congress was unable to act. I think the answer lies with local police departments, mayors, city councils, who really take a hard look at how we are recruiting. One other aspect of this, which is not necessarily the George Floyd murder, but others, like Eric Garner, for example. And of course, by the way, I can think of no legitimate reason for a chokehold under any circumstance.
So the aftermath of that tragic killing of George Floyd and other instances as well led to a fair amount of civil unrest across the country, and a wide range, if I may say, about peaceful protests and also looting and vandalism and violence. What advice would you give to the authorities, whether they're state authorities or national authorities, on how to handle that level of civil unrest? What's the best approach?
Don't be unnecessarily provocative. We learned after Ferguson, for example, that military equipment, military-style equipment on the streets domestically in our cities can be unnecessarily provocative to protesters who are inclined to be peaceful. But when confronted with military-style equipment, the episode may turn to something very unfortunate. Now, David, you got to put it in several different categories. The overwhelming majority of the protests that we've seen over the last 2.5 weeks now have been peaceful. I participated in 2 marches here in Montclair, New Jersey last weekend that were entirely peaceful. I guess you could call me a protester. And the only police presence I saw all day were officers barricading the streets, protecting the marchers.
And finally, Jay, this is not simply a police issue, as you know so well. We have 400 years of systemic racism in this country. Your own family actually has been involved in a fair amount of this. As I understand, your great-great-grandmother was a slave. You have a grandfather who is a university professor. During Jim Crow days, I must say. Give us your sense of history here. Where are we? What crossroads are we at? What can we do going forward that we're not having this conversation again and again and again?
David, the finest example of presidential leadership in my lifetime was March 1965, when Lyndon Johnson went to a joint session of Congress right after Bloody Sunday and said, this is not a black problem, it's not a Southern problem, this is an American problem. We have an American problem right now involving excessive force by the police that impacts largely, if not mostly, the African-American community. That is an American problem. Equality before the law is as American as the flag. And change will come if all Americans realize that we have a vested interest in solving this. This is not just a black problem. It's not just for African Americans to speak about and be upset about. Every American should be equally as upset about what we saw in Minneapolis.
That was Jay Johnson, former Secretary of Homeland Security. Coming up, we wrap up the week with Katie Koch of Goldman Sachs. This is Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Westin. Well, we had a very full week on Wall Street this week, and to really pull it all together for us, welcome to Katie Koch. She is Goldman Sachs Global Co-Head of Fundamental Equity Funds. Katie, wonderful to have you with us. Welcome to Wall Street Week. So give us, first of all, the overview. Going into this week, there was a fair amount of optimism given those great jobs numbers. Did the market get too far ahead of itself? Is that what happened when we had that big downturn on Thursday?
Yeah, so first of all, thank you so much, David, for having me on the program. And I do have an idea for you at the outset, which is to rename this program Wall Street Month, because literally every week in this crisis feels like it's been a month, and this one's no different. But this question that you're asking is what all of our clients are asking. Have markets gotten too ahead of themselves, and really what happened this week? So let me just take a step back and tell you a little bit about where we think we are, and then I'll make a couple of comments about where we're going. So overall, equity markets now down about 5% on the year, recovered 35% from their lows. But that really doesn't tell the whole story. The whole story is more complicated. You have large cap growth markets are up in positive territory, and pretty much every other market in the US as well as around the world is down 10% or more. And in fact, the median stock in the S&P 500 is still down more than 20%. So overall markets are resilient, but within that, there is still some dislocation and some opportunity. And then in terms of where we're going to go from here, and should we be optimistic, I'll give three reasons that I think we should feel good, and one important reason that we might want to be cautious. So on the feel good side, we have a central bank that's highly committed to putting liquidity into the market, which reduces left tail risks for equity markets. Second point we would make is what you've already referred to, which is a very strong economy with the biggest upside surprise in labor markets really in history announced last Friday. We'll need to monitor that to make sure that we get more improvement, and it's sticky, but that's certainly supportive. And then third, we on the virus front, we are having some better news. So reopenings are going better, particularly in Europe. On the reason to be worried front, I just want to point to valuations. So valuations at best are on a 20 times price to earnings multiple. And that's really twice as expensive as we were at the depths of the financial crisis, and more expensive than we were at the beginning of last year. And so people need to be cautious around the price that they're paying for these equity markets. Pulling all of that together, we do think people should remain invested, but we think they need to be highly selective in terms of where to look for the opportunities. But given the dispersion that you already referred to, it's actually the highest it's been in 10 years. There's really never been a better opportunity for active management.
So, Katie, there was one of the things that was discussed a lot over the last couple of weeks is maybe a possible rotation. It had been sort of the stay-at-home stocks, which include a lot of those large-cap growth stocks you said are doing terribly well. And then we thought we saw it moving away from that more to sort of the recovery stocks. It's gone back and forth. How do you analyze that rotation? Has it been happening? Is it going to happen?
Yeah, so we have had a rotation. We've had some really dramatic moves in cyclically depressed names. So let's talk a little bit about what's driving that, and then I'll tell you how we're invested in that. So the retail investor has been extremely active in these deeply depressed cyclical names. And just to give some kind of context behind that, we look at volumes for retail investors. Ameritrade had some data out earlier this week that shows that volumes for retail investors are up 300% year over year. And they are bidding these more depressed parts of the market. So we saw Hertz, for example, was up 1,500% off of its lows earlier this week. And you have this very odd situation where you have a company that's effectively filing for bankruptcy and at the same time is making an equity offering. So retail investors are in net outflow for equities for the year, but they're really bidding this highly cyclical part of the market, which is driving some big moves there. From our perspective, we're very long-term investors and we like secular growth stories. So we're not involved in a lot of these dislocated names, but what we are invested in is companies that are beneficiaries of that volume. So we own the wealth managers, the online brokerage companies, and also the exchanges, which benefit from that volume. But what we really like is long-term secular growth stories trading at reasonable valuations.
So long-term secular growth stories, that makes good sense. Do you also pick, according to balance sheet, according to credit risk, things like that? Given the uncertainty here, do you have to make sure your company's going to make it?
Yeah, that's 100% correct, David. So the number one thing in this environment, because really we all have to have the humility to know we don't know how long it's going to last, is to underwrite that those balance sheets can get these companies to the proverbial other side. In terms of some areas of secular growth that we are invested in and we like, I'll highlight three to you. The first would be in the supply chain space, the idea of localization of supply chains and the beneficiaries of that, which are advanced manufacturing. So we do think that the law of comparative economics is going to hold in aggregate, but some companies are going to have to localize the most vulnerable parts of their supply chain and move from just in time to just in case, particularly true in the semi space and in healthcare. So we like the companies that are beneficiaries of doing that more efficiently, because as they localize, they're going to have to control for labor costs and manufacture more efficiently. So Rockwell Automation would be an example of a company there. Second space, of course, would be e-commerce. As a third of the world has been in lockdown, we've all had to live more of our life online. Just to put that into context for you, we've had what we thought would take 8 years to increase internet penetration. We've gone from about 15% of stuff being sold via e-commerce to 25%. We thought that would take us another 8 years. We got there in 8 weeks. And so we like the companies facilitating that e-commerce trend. One example of that would be Shopify. They actually give small businesses the tools to create a digital storefront. And the really interesting part about this is that those small businesses can actually sell from their own website, and they don't have to go to a big marketplace like Amazon, where they could get disintermediated from the client. So that's an interesting company. And then finally, I would highlight the intersection of technology and healthcare. And in that space, we like medical devices and robotic surgery in particular.
Right. Yep. Telemedicine is all the rage, no question about it. That is Katie Koch of Goldman Sachs. You can see why it was so important to talk to her at the end of this really tumultuous week on Wall Street, because she really understands and can explain the equities. And besides that, she can rename the program. She thinks it should be Wall Street Month, given the fact that we feel like we're living through a whole month every single week. That does it for Wall Street Week. I'm David Westin. This is Bloomberg. See you next week.